Hello, everybody. Welcome to Monday. The S&P 500 was up a little over 0.9% today. The tech stocks are really leading the way today. The NASDAQ was up 1.5%. The QQQ, which is the top 100 by size stocks on the NASDAQ, was actually up almost 2% today. Really big day today altogether. Our signals have not changed. Still green on both fast and slow on the stock, and green and yellow on the fast and slow on the bonds. And a very significant thing happened to me today, as far as I'm concerned, which is just the fact that the S&P 500 closed above 4325. This is the highest close in the last 12 months, and it breaks the barrier that we had set back in August of last year. And so again, in my checklist of changing primary direction from down to up, we've met pretty much all of those pieces. Doesn't mean we're going to go up forever, although the history does show a very good record for a market that has had at least a 20% gain from its lowest point and turns back into a bull market, having some persistence and continuing for quite some time after that on average. So this is a different time frame. History doesn't include a pandemic and a lot of the data that we're looking at, just because that didn't happen since 1918. So we'll see how that plays out. But nonetheless, things have been quite good altogether here in the stock market. The Federal Reserve, of course, is meeting tomorrow and Wednesday. They'll come out and say whether they've done anything in terms of raising rates. The expectation is that they will not raise rates. The expectation is also that they will talk aggressively about possibly raising rates. So they kind of have a hawkish tone to the address. I wouldn't be surprised by that. They'll try to use, their words as much as possible. They'd rather not raise rates. Raising rates obviously has the danger of creating, some problems in the future, but also, cost more money to issue new treasuries. And they're faced with the situation where these regional banks, which are doing better, are still probably not going to be lending as much money, just because, a rumor can create a huge flight for capital. So they want to hold on to some of that capital. That could have some impact on commercial real estate, which is already struggling some because of the work from home environment that we're in. So we'll see how that plays out. And I think that's why they're pausing to see if that credit tightening has some impact beyond what they're doing. So we'll see how this plays out. But so far, the market likes what it sees. Certainly seeing the benefit in the technology arena, which is nice to see, because it's good leadership, as far as I'm concerned, good quality companies with great cash flow and good cash positions and such also. So that's what's happening today. Looking forward to seeing what's going to happen tomorrow. Thank you very much.